Good afternoon, everybody. This is the Stock Frog giving you an in-depth analysis on the financial markets and helping you become a better trader and investor. Now, we need to talk. The markets are absolutely insane right now. There's a lot that is going on and a lot that you are going to want to be aware of in the future for what could possibly happen in the financial markets. So, if you're new to the channel, click subscribe. Click that thumbs up button and leave a comment down below to help me out with the algorithm. Let's get into this. The first index that we're going to look at is the S&P 500, ticker symbol SPY. We're currently on the 1 minute chart, and we are going to zoom out so you can get an idea of what the SPY has been doing today. Today is the 8th of April. We're going to go back all the way to the beginning of the day so you can get a clear picture. As you can see, on market open, we gapped up. There was a sharp movement downwards, some consolidation, and we really didn't get anywhere at all. That means the bulls and the bears are both fighting for position. Now, it's important to look at a stock at multiple different time frames. On the 1 minute time frame, we're identifying that there is neither a bullish or bearish trend, hardly bullish, if so. As you can see, it fell down, deteriorated, and slowly consolidated, came back up, but it didn't really go where it ended the day right about where it started. So that means that there's going to be a big movement in the next couple of days, I would imagine. Now, again, I'm going to remind you this over and over again as a subscriber. Anything can happen in the markets. If anybody tells you they know what's going to happen, they're simply lying to you. We're going to zoom out to the 5 minutes so you can get a better idea. Look at that, same pattern, 5 minute chart. We got the 30-minute chart, and we're going to go all the way out to the daily chart. Yes, let's go ahead and zoom in and show you that today was our little green bar. So you saw on the 1 minute chart that we were consolidating, moving sidewards. However, today it is just one green bar. Let's zoom out and look at the whole context in terms of where the market is at. As you can see, it is no surprise. Everyone knows that the S&P 500, that all financial markets for the past couple of years have been extremely bullish. If you've been investing, if you've been trading, you've been very successful. And as you can see, there has been a strong upwards trend. Well, contrary to popular belief, that doesn't always happen. Markets go through what we call cycles, and they don't always go up. Specifically, I want you to take extreme caution. Look closely here. What do you see? We see that the SPY has gone up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. 10 consecutive bullish days. Now, there were some days that gapped down, so it wasn't just straight up. But the fact of the matter is if you've been trading the SPY the past 10 days, you've most likely made money if you have been doing so in bullish context. Now, something that we've been identifying here is this yellow line, the 50-day moving average, is where the stock has been bouncing off of. So what we can expect to see in a little bit here is if we draw a line, here, let's adjust this up here, you'll see that there is a level of resistance, meaning this stock is going to do one of two things. It is either going to hit this resistance and get rejected and come back down, or it is going to break through. This resistance will now become support, and we will continue to hit higher highs. We are at all-time highs right now with the SPY. Whenever we're at all-time highs, you always want to be aware of what's going on. As you can see today, we popped above this line, but price was rejected and we are now below it. So we can expect a market correction to happen this next week. And, we could be going down past this support level right here, this support level right here, there's a lot of room for this to run. So you want to proceed with caution. As you know, the S&P 500 is one of the most popular ETFs, and therefore can show us really what's going on with the markets as a whole. Now we want to take a look at the QQQ, which is a tech-heavy ETF. Now, you'll notice this with all of the major ETFs is that they move in similar patterns, but you're going to notice something different about the QQQ. Now, if you know anything about the markets in the last couple of years, it's that tech has absolutely crushed it. Stocks like Tesla, Apple have been increasing more than value stocks. These growth stocks, these tech stocks have been absolutely parabolic, resilient. They've been awesome. And now what we're noticing here is that QQQ, when the market got hit in, when was it? Right at about February 16th, the tech got hit a lot harder. It actually went under the 50-day moving average, which did not quite happen with the SPY, you'll notice. So we've traded under there. We finally broke above, and we had an absolutely incredible week once again, but we've got to be aware of something. We are not at all-time highs with tech. In fact, all-time highs would have to be right at about 338. So as you can see, there's still a level of pending resistance here. Now, if we mark support lines and resistance lines, you'll see that we're able to identify spots that the QQQ could go to if price is rejected. So we're going to be watching very closely here, and if price breaks through the top of this all-time high, I'm going to be looking to take a position in the QQQ or maybe the TQQ. Now, if price is rejected and comes back down, well, we could be falling back to here. We could be falling back to here. We're currently at $335.08, but the stock could fall all the way to 320, 313, 298. Now, again, I'm not saying that that is going to or not going to happen, but you just merely need to be aware of what's going on. If you look at the other indicators, such as the MACD, you see that the MACD moves in patterns. It's red, it's green, it's red, it's green. It is very green right now, indicating that it could be overbought and that we could be due for another correction. Again, if we break through here, we're looking good, but you want to be very cautious when these stocks approach these support and resistance levels. That is when the big moves can happen. Now, to get a better idea of tech, we want to zoom in onto the 1 minute chart. If we look at the internals of the 1 minute chart, you see we had a huge gap up in the morning. And again, sideways trading type of day. It was really hard to make money in the big markets today because of this sidewards trading. It's hard to make money when there's not a clear direction down or a clear direction up. Stocks move in a clear direction up, sidewards, up or down, sidewards, up, sidewards. That's something that Stan Weinstein talks about. And there's a lot of people that have identified these trends. Again, sideways means consolidation. Consolidation means we could have a big move up or big move down. So you should proceed with caution. Now we are looking at the VIX Market Volatility Index. Basically how the VIX works, if you didn't know, the higher up the VIX gets, the more fear there is in the markets. The more fear there is when markets tend to tank. If you see this huge spike right here happen at a time that you might recognize, March of 2020. What happened in March of 2020? There was a certain global situation that caused a lot of panic and people to sell off. So if you look at all of pretty much every single ETF, it went down a ton and then up, and we've recovered since. Well, the VIX is kind of an inverse to that in a way that when this uncertainty happened, if you would have bought into the VIX, you would have been saying, hey, based on the shorts, positions, the short amounts, the short interest, etc., I think that the market is going to tank. I think there's a lot of fear, and you could have made a lot of money profiting with that. Well, as you can see, there's always a consistent pattern. Markets always have patterns. They're not exactly the same. You're not able to predict them, but you can look at them to have caution. Now, I'm not going to talk about why it's going down and down and down. There's a form of decay that happens with the VIX, but what you need to see is there is a flat line with the VIX. It pops up, it comes down. It pops up, it comes down. Well, where are we right now? We happen to be down. This means that there's not a lot of fear in the markets. Well, I think there should be some caution because something could happen. We could be due for a correction, and if that were to occur, you would see a spike in the VIX. So considering that there's low and not a whole lot of fear in the markets, really, really interesting to see what's going to happen this next week because, again, we could have a big spike up, or I could be totally wrong, and it could be going down and crashing, and that would mean that the market was still healthy. But anyways, all you need to know is when the market's down, the VIX is generally up. When the market is up, the VIX is generally down. So market is in good health right now. That is not going to happen forever. Don't be the Ricky investor that gives in to the news, that gives in to all these people saying, hey, look, the market's doing this. Oh, it's crashing. We're never going to be able to make money. If you go on to Webull, which is a stockbroker that I use to trade stocks, and if you look at a stock and when it's falling, all the comments say, oh, this stock is horrible. I'm never going to make money. This is the worst. And people are they have no patience. They don't understand that stocks go down before they go up. And it's important to understand that one, we have levels of support. It was broken here, so you got to look for the next level of support. But two, when a stock is going down, don't worry, wait it out. There's going to be a buying opportunity. And on the flip side, when it's going up, you need to learn how to take your profits before it comes back down, unless you're an investor buying and hold. But that's beside the point. We're going to look at one more index to end this video, and that is going to be the Dow. You were looking at the daily chart right now. The Dow happens to be just above all-time highs this past week. Now, the all-time high is 336. However, we're not necessarily at all-time highs this very second because 335, 336, but we're really close. The fact of the matter is right here at 336, we're seeing some level of resistance. So we want to make sure we pay close attention to see what the Dow is going to do. Again, this is all very similar. You see that the S&P 500 is at all-time highs right now. The Dow isn't, and the Qs is a little below. They all are very similar. It does not, however, mean that they are the same. The Dow also had success bouncing off the 50-day moving average. So we're going to be looking for it to correct at least down to here, possibly down to the 50-day, and possibly, again, down below even more. The MACD is really green right now. The RSI indicates that it's somewhat oversold right now. We are due, in my opinion, for a market correction. After that could be a good buying opportunity to make a lot of money, or if not, could be an opportunity to short the market. Regardless, the market is very indecisive right now. It's consolidating, and it is deciding if it wants to move up or down. That's what you see. Stocks move up, sidewards, down, sidewards, up, sidewards, down, sidewards. There's always a pattern. And when it moves sidewards, you want to be prepared for a movement to occur either up or down. And that is the basics of the stock market. That being said, the Dow is looking good. The SPY is looking really good, and tech is looking pretty good. So there are going to be a lot of opportunities, I think, in the next couple of weeks to take a good position. Remember, you don't have to trade every day. You do not have to trade every day. You want to make sure you're always aware of what's going on in the market. So if you learned anything from this video, if you found it just a teeny bit valuable, I would ask you to consider subscribing to this channel, and we can talk about stocks on the daily. I'm going to be posting these videos every single day after market close to help you understand the health of the markets and help you understand the risks of doing so. Thank you so much for watching. Don't forget to subscribe, and I will see you tomorrow.